Welcome to etvFutures.com. It's Monday, December 3rd. I'm Remy Hookey with your Commodities Recap. NYMEX crude oil futures ended the session higher after seeing red earlier in the day. The market awaits OPEC's decision on oil production coming out this Wednesday. The benchmark crude oil contract fell to an intraday low of $87.20 a barrel, but started to see gains towards a session end. January crude oil closed up by 60 cents at $89 a barrel. In other NYMEX petroleum products, January reformulated gasoline rose 1.95 cents to $2.25.01 January a gallon. Heating oil fell 0.39 cents to $2.51.11 a gallon. Meanwhile, January nat gas futures fell 8.8 cents, closing at $7.214 per million BTU. In the metals complex, gold futures ended up on the day regaining some strength after seeing weakness in the previous sessions. Earlier, the benchmark contract hit an intraday low of $788.80 an ounce. February gold closed up by $5.60 at $794.70 an ounce. Other metals prices ended the session mixed. December copper fell to close at $3.06 a pound. March silver added 4.5 cents, closing at $14.21 an ounce. Now we're joined by James Mound from James Mound Trading Group and author of the Mound Report. He'll give us his commodities outlook for the week ahead.
This is James Mound from MoundReport.com with the week ahead for the week of December 3rd. Got about 2 weeks left before we go into holiday trading period where the volatility and volume become very sporadic in the markets. We tend to go on vacation that time of year. But for the next 2 weeks, we got a couple of major events happening that will cause some extreme volatility in the market, and there's some action here to trade. So without further ado, let's take a look at some markets that are going to see some price action the next couple of weeks. First, the currency sector. Saw some strong U.S. dollar support last week, and as we approach the Fed meeting next week and the employment report this Friday, I suspect that we'll see a strong rally in the U.S. dollar and some selling pressure in the euro and the pound. Right now, we're seeing this trend reversal in the fundamental structure of the currency markets in that the U.S. government and the Federal Reserve is looking to lower interest rates, and foreign markets like the euro and the UK government, the British pound, they're looking to raise rates, which causes some selling pressure in their currency and a reversal in what's been an extremely long-term uptrend in those markets without any major price retracement. So I suspect we have the fundamental underlings here for a trend reversal in the currency sector and a strong dollar push through the end of December. So I'm aggressively buying U.S. dollar and shorting foreign currency. Exclude the yen from that picture and the Canadian dollar. We've been short the Canadian dollar from near the highs here, even though we've been chasing it on the way up. To a certain extent, this market has a lot more downside to it, but near term, I'd wait until we broke 98.60 before getting back short, and I'd cover any short positions at the current price levels. Moving on to other markets, we're going to see a World Ag Supply and Demand report next week in the grain sector. Grain markets have been seeing some selling pressure the last few days, but overall remain in a very bullish technical trend, and I suspect that any selling pressure we see, especially in the soybean market as well as corn, should be bought into aggressively. Outside of that, crude oil had one of the biggest down weeks in its history last week, and I suspect that we'll see the beginning of a major price correction in that market, something we've been expecting for a long time, and you can still capitalize with some bear put spreads and things of that nature to play to the downside in a defined risk environment. I highly recommend crude oil and RBOB gasoline as your main targets for price corrections in the energy sector. Natural gas may have some supportive elements, but could see a price correction in sympathy with the other energies. Last but not least, let's take a look at the metals sector. Because of the action we're going to see in the currency markets, I expect with crude oil collapsing that the gold and silver markets do not have much more life left to them. Looking at it technically, we even see the potential for continued downside to maybe the 750 area before any type of price relief would come in, and ultimately a target of $700 an ounce on gold, which would be a major price correction in silver and sympathy, maybe down to about $11.50, $12. This may not happen next week, but it's certainly setting up the trend for that to occur, and I would look for a break to about 772. We closed below that mark on front month gold. That would be a very strong indicator to me that there's a major collapse on our hands here. That'll do it for me, James Mound, MoundReport.com, with the week ahead. See you next week. Bye-bye.
That was James Mound from James Mound Trading Group with his commodities outlook for the week ahead. I'm Remy Hookey. Join us later for PM Exchange right here on etvFutures.com.